Joining us right now is Gerard, Cassidy, head of U.S. Bank Equity Strategy at RBC Capital Markets. You think this is over? Finished? I hope so.
So do I, Andrew. I would say that obviously we're moving out of the woods. We're not out of it completely, but we're certainly heading in the right direction based upon what we saw yesterday from the Federal Reserve, the FDIC, and the U.S. Treasury. Those actions were very powerful.
Okay, so how do you feel about some of the smaller regional banks? We'll look at some stocks that are still off, and I'm talking about First Republic, some of the smaller banks in California. We're, by the way, looking at Comerica's off 6% this morning. Fifth Third is off. I mean, we got a bunch here. Now, they don't have a gun to their head the way they used to, but the question is, over the next year, do they end up merging? Do they end up getting sold? Do they end up what happens here?
I think what we have to take a look at, Andrew, is that these banks are very well capitalized. They've got plenty of liquidity, and unfortunately, some of their bond portfolios are upside down, and we all know what happened to Silicon Valley on Friday and Signature Bank yesterday. And I would suggest that as things calm down and the message gets out, and Roger said it well in the prior minute there, that the messaging has to get out that all deposits are safe. Now, some are going to leave. I'm with him. You're not going to see a smooth transition. This will be very bumpy. But within the year, to your point, I think these banks will obviously maintain profitability and build up confidence in the system.
Okay, but the other component part is, even if they do that, it is likely, I imagine, that regulators decide that all of these banks are systemically important. And if all of these banks are systemically important to some degree or another, you're going to be requiring higher capital requirements, things that look a lot more, I imagine, like some of the, quote, SIFI banks, the big banks that we've looked at. If that is true, I imagine either, loan rates are going to have to go much higher, so it's going to be much more expensive for customers. That's not so great for the economy. And some of those that loan business goes to even smaller private hands. Call it the shadow banking system gets even bigger.
I would say I think you're onto something in the sense that more banks will be regulated similar to what the largest banks are being regulated today. That I don't disagree with. That being said, though, we have to remember that it's a very competitive market out there for loans. And you pointed out that the shadow banking industry has grown dramatically over the last 40 years and has taken away market share from the banks. That being said, the banks are still obviously very profitable. Right. So there will be interesting twists and turns to this. We don't have all the answers yet, but I would say that the banks are not going to roll over and just hand business over to the shadow banking industry. They're going to remain very competitive with that market as well.
By the way, how concerned are you about the shadow banking industry? Meaning there is a completely sort of other business, a loan business taking place in America that is really, we don't talk about it on the air. There's no stocks. They're not public for the most part. It's a completely different business. And I don't think we've spent enough time necessarily thinking through the ramifications of that. We clearly hadn't spent enough time thinking through the ramifications of the way some of these balance sheets at some of these smaller banks were looking.
No, you're bringing up an interesting point. We've always expressed concern. We think the banking industry post-financial crisis was de-risked by the Federal Reserve. As you know, they go through the stress test every year, and they've pushed a lot of the risk into the shadow banking industry. And to your point, we don't know all of the vulnerabilities there, but we do know that it's going to be a credit area of focus if we go into a real recession. Obviously, the shadow banking industry does not have deposits, so there's no concern of any deposit disruption. But you're right. It is an area of risk that has to be monitored very carefully.